Donald Trump is crashing the market on purpose. Why? Well, the USA has a $9 trillion debt crisis that's about to happen. And his plan to deal with it is to send us into a recession. Now, this might sound scary, but it might actually work. And if you know how to act during times like these, it might not affect you as bad. And in fact, you might come out a lot wealthier. So in this video, I'm going to break down exactly how all of this is playing out, what it means for your money, and what the best moves are that you can make in order to benefit from this. So let's get started. Why Trump wants the market to crash and how it could make you rich. Okay, so the US has been running on a massive budget deficit for quite a few subsequent years, meaning that it has a lot of debt. And this debt, a lot of it is maturing this year, meaning that the US government needs to pay it or refinance it. Now, it doesn't have this amount of money. So in 2025, this year, there's around $9.2 trillion of debt that needs to be paid. Well, this cannot be paid because they don't have a budget surplus. So there's no $9.2 trillion of cash laying around that they can use to simply pay down this debt. So they need to take out another loan in order to refinance that debt. And one of the big problems that the US has right now is that the interest rate is way too high. So if it needs to refinance its debt, then the interest payments on that new debt are going to be super high, which are going to place a very big burden on the economy, on the taxpayer. So Donald Trump has come up with a very interesting plan in order to still figure out a way to figure with this debt crisis that they need to deal with. Now, let's talk about this. Here you see the 10-year Treasury note yields. So here, what you're seeing in this chart is you're seeing a line that's over time dropping from January until March right now. And we saw that the first yield drop was ahead of the inauguration of Donald Trump. And later we saw another very massive drop when the Doge layoffs accelerated. So in case you've been living under a rock, the US established a Department of Governmental Efficiency headed by Elon Musk. And their goal was to simply cut down on the spending of different government departments. And now in March, compared to earlier, the 10-year note yield fell with around minus 60 basis points in a time span of 6 weeks. And if you look up the meaning of what this means when the 10-year bond yield drops, it means in general that the market is anticipating an economic slowdown, aka a recession. So the market is always forward-looking. So oftentimes you can see what is going to happen next by analyzing what certain assets in the market are showing. Now, after every recession, because there might be a very big reason why Donald Trump wants us to go into a recession, because after every recession, what we see here in this chart, so every recession shows a gray zone. What we see is that after every recession, the interest rates drop. So we see a peak in the interest rates, and this pattern has repeated since the 1980s, right? So this is a pattern that has been playing out for the past, 40 years. So every time we see a peak in the interest rates, then we see a recession. And then during the recession, the interest rates drop really quickly. And then we see a new cycle where interest rates go up again. We see a peak, then we see a gray zone, which is a recession. During a recession, interest rates drop really quickly. Now you might wonder, why do interest rates drop during a recession? Well, if the economy is performing very poorly, then what central banks want is they want to inject the market with cheap money so that the government, so that the economy can gain back momentum. So the economy needs access to cheap money, meaning at low interest rates, so that companies can make new investments into the future and that they can build out new capacity, build out new products, services, and grow their current businesses. and that ultimately leads to an economic boom. And this is the way how markets go. They go from booms to busts to booms to busts. So over time, it tends to be this cyclical pattern. So every time we see this peak in the interest rate, we see a recession. The recession drives down the interest rates, or the central banks respond to recessions by lowering the interest rates. And then again, we see this peak, and then we see a massive recession, which drives down the interest rates again. And now, recently, we are at a point where many analysts are expecting that this is the peak of the current interest rate cycle, and that we might see drops again if we see a recession. The current Trump administration also wanted to do something else. They wanted to lower the cost of oil and gas. And this is what we saw in the past 2 months, 3 months. So Trump was inaugurated, and then afterwards the price of oil started to drop. Why? Well, few reasons. So Trump literally mentioned it during his campaign that he wants to drill more oil, drill baby drill. So he wants to tap into the US oil reserves in order to expand the supply of oil on the market. And when there's more supply on the market, it tends to lower the price. But also by making use of other mechanisms such as tariffs and trade wars. And within a period of 2 months, the price of oil dropped with around 20%, which is quite a significant drop in a very short period of time. Now, in Davos, which is in Switzerland, on January 23rd, right after Trump was inaugurated, or right around the time that Trump was inaugurated, the US President Donald Trump demanded that OPEC, which is a coalition of oil-producing countries, lower their oil prices and that the world drops their interest rates. He said this in a speech addressed to the global business community and political leaders, and warned them that if they didn't do this, then they will face tariffs. And we actually now see that Donald Trump is actually following up on these threats or promises that, you know, he's going to start placing tariffs on other countries if they don't want to play ball with him. So I'll demand that interest rates drop immediately, and likewise they should be dropping all over the world. So Trump said via a video in the World Economic Forum in Davos on Thursday, I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. So yeah, Trump has 2 or 3 big focus areas. Number one, he wants to bring down the interest rates because he needs to refinance all of the debt. He wants to bring down the cost of oil and gas. And there's also one other thing, which we're going to cover in just a little bit. But yeah, here you see Trump, we will drive down the price of oil. And if we drive down the price of oil, then everything else will follow. So he has promised the US and, you know, the rest of the world, because everything is sort of interconnected, that he is going to bring down inflation so that the average person is not suffering as much as they are right now. Because right now, salaries have barely gone up compared to inflation, meaning that people can buy less products and services with the same salary that they have. And people are struggling with this. They don't have as much excess cash, or they're struggling to barely make ends meet, and people are just fed up with it. So these are the measures that he's taking in order to bring down inflation. So here's a post that talks about that the third focus area of this second Trump government is Trump wants to lower the DXY, meaning the dollar strength index, which is the strength of the dollar compared to other currencies out there in the world. Now, why would you want to lower the strength of the US dollar? Is the strength of the US dollar not particularly good for the US economy? Well, you need to think about it in this way. If the dollar is very expensive compared to other currencies in the world, then it is very expensive for other countries to buy products in the USA, because their products are very expensive if they need to convert them into their currency to buy their products and services. Now, if you lower the value of the dollar compared to other currencies in the world, then suddenly it becomes a lot cheaper to buy products and services in the US. And this means that the US will export more products and services because it just becomes cheaper for other countries. So that's why he wants to bring down the value of the dollar compared to other major currencies out there, like the euro, the yen, the pound, you name it. So yeah, the second Trump government wants to lower the value of the dollar. They want to lower interest rate, and they want to lower the price of oil. And there is a way to do this, and it's a market crash. But he does not want that either. He wants controlled demolition. So what do we mean with controlled demolition? Well, maybe you've seen these videos on social media, but sometimes we build these very massive structures like shopping malls or even apartment buildings, and these structures sometimes are outdated or need to make space for newer structures. So what you do in such a scenario is you strategically place dynamites or explosives in these buildings to bring them down into a controlled way so that they don't simply fall over and fall into other structures, so that people get hurt or other unnecessary buildings collapse and cause damages, whatever. So that's what we call controlled demolition. Now, Donald Trump is trying to do the exact same thing to the stock market. He's trying to bring it down in a controlled way without trying to break down any unnecessary things. He just wants to focus on interest rates, the gas price, and bringing down the conversion rate or the value of the dollar compared to other currencies, so that exports become cheaper, or so that exports become stimulated. And when there's more exports, then the US economy tends to thrive. That's what he wants to do. Now you might wonder, why doesn't Trump just simply bring down the interest rate? Why does he need to crash the market for this? Well, what you need to understand is that the Federal Reserve, which is the central bank of the United States, which controls the interest rates, is not government owned. In fact, the central bank, the Federal Reserve, is a private entity. It's run by a cartel of bankers or banking institutions, and they're completely separate from the US government. So Donald Trump cannot simply go in there and demand that the interest rate gets dropped. No, he needs to create the perfect environment for the central bank to react, and in order for them to bring down the interest rate. Donald Trump says oil is down to $65 per barrel, and that's much faster than I would have anticipated. When energy comes down, prices are going to be coming down with it. So he's talking about inflation. Here's a tweet talking about MAGA economics, so Make America Great Again, which is the movement around Donald Trump. And this tweet is saying MAGA economics are working. Trump has already brought down oil prices marvelously. This is going to power the great economic growth. In the last 4 years, the price of WTI crude, the US benchmark for oil prices, has only dipped under $69 one time. But Trump has brought it down to $66 in just 7 weeks. Note, the spike in January was when OPEC decided to lower supply to drive up the prices. But Trump has made OPEC pointless, aka he's winning the game. So OPEC, again, what I mentioned, is a coalition of oil-producing countries. I think it stands for, oil. I don't know what the acronym exactly stands for. You can find it on Google. But it's a coalition of oil-producing countries. So Russia, Saudi Arabia, Brazil, and a bunch of other countries out there. And they control the supply of oil. So they control how many new barrels of oil get produced, and they manipulate the price of oil, driving it up artificially in order to maximize their own profits. They act as a cartel. But Donald Trump, through all of his measures, has still been able to bring down the cost of oil. Now, why do you want to bring down the cost of oil? Because a lower oil price leads to lower inflation. Just think about it. Here, water. This water needs to be transported from the factory to a shop, a supermarket, and then the supermarket, or I order it from the supermarket, so the supermarket needs to take care of transportation to my house. So there's a lot of transport cost for all of the products and services. Also, some products require oil in the products themselves, and there's just a lot of oil usage within transport or the production of different products and services. So oil drives down everything. If you can bring down the cost of oil, then you can bring down the cost of everything. That's the rationale of Donald Trump. And when there's lower inflation, then the Fed has no choice but to cut rates. So again, here a little tangent. Why does the Federal Reserve, the central bank of the US, increase rates? Well, since 2020, central banks around the world have printed a lot of money. Why? Because trillions had to be pumped into the global economy in order to keep everything afloat. Now, with so many new units of money in circulation, inflation went up drastically. And this made life for everyone so much harder. Now, the response of a central bank to high inflation is usually to bring up the interest rate, aka to make money more expensive. So if money is super cheap, then everyone is going to borrow money and there's going to be a lot of new units of money in circulation. Everyone's going to be spending like crazy, driving up the prices. But by increasing the interest rate, they can actually cool down the economy. And that's usually the response of a central bank. But when inflation is low, then actually they don't have a big reason to keep the interest rate high. Then we go into another phase of the interest rate cycle, which is economic stimulation. Then actually you can make sure that money is flowing freely throughout the economy, that people are buying products and services again, that companies can invest into their future growth. And yeah, that's part of the cycle. And Donald Trump, again, is engineering the perfect conditions for the Fed to step in and to lower the interest rate. He's saying nobody gets rich when interest rates are high. So energy needs to go down, because if energy prices go down, then inflation goes down. And when inflation is down, interest rates can go down too. So this is what Donald Trump recently explained. And actually, he's been explaining this on social media, on interviews, on TV, different media outlets. So this is a very clear objective that he seems to be pursuing right now. But here is a chart of the interest rate expectations, so the 12-month interest rate expectations. And actually, the interest rate is, what am I talking about? I'm saying the inflation rate expectations. So the market right now is still expecting that inflation is going to go up within the next 12 months. In fact, the market is expecting that we'll see a roughly 6% inflation. Now, where's the 6% inflation coming from? Well, it is partially coming from all of the tariffs. So Trump has been placing tariffs on Canada, on China, on Mexico. And this basically also means that the prices for US consumers are also going to go up. So his policies, some of his policies are slightly contradicting, because his tariffs are actually increasing inflation. And when inflation is increased, then the central banks cannot yet cut tariffs. Now, cannot yet cut interest rates. But you need to read between the lines. The tariffs might actually not be permanent. It might be part of a master chess player's moves, a grandmaster who plans 10 moves ahead, by announcing all of these tariffs to the rest of the world and using it as a force to come very strong into negotiations and to get the best possible deals. He may or may not actually get rid of those tariffs over the long term. But now that he's coming into office, he wants to threaten the rest of the world. He wants to threaten other countries that he's going to place tariffs on their products and services if they don't want to play ball with him. But when that happens, then actually the inflation might go up in the next 12 months. So Trump mentioned that he's not even looking at the stock market right now. And this might indicate that, yes, he's hinting that probably there might be a little dip, there might be a little recession coming up. But he's doing all of this to make the US stronger over the long term. So he wants to go through the short-term pain in order for the long-term sustainable gain. So yeah, and trust me, Donald Trump probably has a a lot of investments right now, so it probably also hurts him to see that the market is down, because previously in his previous presidency he was very much focused on the stock market and saw it as a proxy for the US economic health. But right now he's turning a a blind eye to the stock market, and he understands that on the short term it might go down in order for it to go back up over the long term and go on the next explosive phase of growth. Here, the Atlanta Fed has this estimation called GDP Now, which is a rolling estimate of the US economic growth. And actually, this estimate dropped from 3.9% all the way down to minus 2.8%, meaning that the Atlanta Fed, the Federal Reserve of Atlanta, is actually expecting that the US will have a minus 3% economic growth rate this year. And this whole estimate changed in the past 4 weeks after Trump came out with all of the tariffs and all of his recent moves. So this again is indicating that we might go into, or that the stock market might go into a recession. And if that happens, if the US goes into a recession, then again, this is the perfect condition for the Fed to step in. So here you see this CME Fed Watch tool, and it's a conditional meeting probability. So here you see the different meeting dates of the Federal Reserve, of the committee, the FOMC, and here you see the dates. So on the 19th of March, and here we see all of those other meeting dates. And here you see a table of what the market expects. So here on the 19th of March, there's only a 3% expectation that we will see rate cuts. There's a 97% expectation that we will not see any rate cuts. However, the further we go in the year, so the later we are in this year, 2025, we see that the higher the probability becomes that the Fed is going to actually start to cut rates. So here you see that the probability that the Fed is going to cut the rates in the next meeting is actually already 31%. The next meeting, 57%. The next meeting, it might actually be a bit bigger rate cut. So basically what you can conclude from this table is the market expects that the further we are in the year, the bigger the likelihood of a rate cut. Now, why is this important for you? Let's talk about that in just a bit. Let's first talk about why this is so important for the US. Because here you see a chart of the average interest rate on Treasury debt. And here you see that the US has the highest interest rate that it has had since 2008, 2009. So that's why Trump really wants to bring down the interest rate. So first of all, it's really beneficial if they can refinance the debt at a much lower interest rate, because this will reduce the burden on the US economy, and this will allow it to flourish again over the long term. Because the US right now is running on a budget deficit. It has roughly, roughly $2 trillion of budget deficit last year. Okay, that's a massive number. That's 2 with 12 zeros behind it. That's such a large amount of money that for most people, they will not be able to comprehend how much money this actually is. And if on top of that, they also need to pay very high interest rates, then it starts to become a very negative spiral. And ultimately, Elon Musk mentioned this as well. He believed that if right now this current Trump administration isn't taking the measures that they're taking right now, then in the next few years, the US will go bankrupt. And that's something they want to avoid. So that's why they're taking all these very intense measures, like setting up Doge, all of the tariffs that they're placing, trying to crash the market, to go into a recession, force the Fed to actually lower the interest rates. Because if that doesn't happen, the US is going to have a massive problem. Now, some analysts have analyzed the past actions of the Federal Reserve, and they came to the conclusion that the Federal Reserve will be hard-pressed to lower the inflation rate without a significant blow to the US economic activity and a sharp rise in unemployment. So the way that I interpret this is that the Fed will not lower the interest rate unless we see something like a recession happening. So again, Trump is trying to engineer this condition for the Federal Reserve to step in. Otherwise, the Federal Reserve is not going to lower the interest rate. And the US already has one of the largest public debt net interest payment. So basically meaning the ratio of their interest payments related to the GDP, meaning the gross domestic product. So the total economic output of a country. So the US has around 4.6% of their GDP, which now goes to interest payments. Greece, 2.5%, Iceland, 2.2%, Spain, 2%. If you go further down the list, Australia, 1.1%, Finland, 0.7%, the Netherlands, 0.6%. So they are already at a very large portion or ratio of interest payments to GDP. So if it goes even higher, then it starts to become a debt spiral, and this might lead to the bankruptcy of the US. So there's a lot of urgency right now. So here's an article with a headline, "Are Trump and his team behind the collapse of Bitcoin and altcoins?" That's a big claim from the famous US CEO. Well, Trump wants to crash the market. That's exactly the thesis that we've explained here in this video. He wants to crash the market because this will force the Fed to lower the interest rate, and this will help to refinance its trillions of dollars of debt cheaply. But the bull market is not over yet, guys. Let me explain. Because this chart shows the relationship between the Bitcoin price, global liquidity, and the federal funds rate. So let me show you this chart. So what we see here, the red and green candles, that's the price of Bitcoin. Now, this is a previous bull market. In the previous bull market, we saw that Bitcoin crashed from roughly around $8,000 all the way down to $4,000, $5,000 per Bitcoin. I know if you think about it right now, Bitcoin is somewhere around 80, 90K. Imagining for $4,000, $5,000 Bitcoin, that would be an absolute, no-brainer buying opportunity. But at that time, people were panicking. All right, the market was crashing. This was around COVID times, so they thought the whole global economy was going to collapse. So what the Federal Reserve did is they rapidly dropped the interest rate in order to make money cheaply and to inject the economy with cheap money. Now, here's the interest rate that you're seeing. Now, what happened as a result? The global money supply, which is the blue line, rapidly increased from there onwards, meaning that there's more liquidity in the financial markets. Now, the price of Bitcoin from this bottom started to go up very drastically. So here, Bitcoin bottomed out, interest rates dropped, global liquidity went up, and Bitcoin went on a face-melting bull market. The price went from somewhere around $4,000 to almost $57,000 per Bitcoin, the previous all-time high, or close to the previous all-time high. So that's what can happen in a very short period of time when we see low interest rates and we see global liquidity going up. And we can conclude the video by making this point. So right now, yes, Donald Trump might actually be trying to crash the market to bring us into a recession. But if you understand the longer term picture of what is really happening, well, if this thesis is playing out, then this recession will force the Fed to cut rates later this year. And when rates are cut, then there's more free money flowing into the markets, driving up the price of Bitcoin later on, just like it did in the previous bull market. So actually, this might be something super beneficial for us. And I do believe that this could be a massive catalyst for Bitcoin right now, on top of all of the insane adoption that's already happening. The pension funds that are scooping up Bitcoin, Fortune 500 companies that are buying up Bitcoin and adding it to their reserves, and even countries which are now embracing Bitcoin and establishing their Bitcoin strategic reserves. So I'm really curious to hear your thoughts in the comments below. Do you believe that Trump crashing the markets right now will actually lead to the next phase of the Bitcoin bull market, and that later in 2025 we are going to experience an unprecedented leg up? We're going to see much higher prices than people are imagining right now in this current sour market where people are panic selling and people have given up all hope. The retail investors are super bearish. People are calling the tops. They're taking money out of the market. But I'm curious to hear your thoughts. Is this a moment to sell and to get out of the market, or is this actually a period where you should accumulate more and get ready for what is about to come next in 2025? Now, thanks for watching this video. If you thought it was useful, do me one quick favor, smash the like button. That is good feedback for me so that I know that you got good value out of it. And if you haven't done so yet, also make sure to subscribe to my channel, because my goal is to help you to maximize your profits in this crypto market. I know there's so much stuff going on out there and it's very hard to make sense of everything that's happening right now. And I want to help as many of you to cross the finish line as possible. So I'm making these videos regularly to help you to make sense of everything that's going on and to help you to position yourself for maximum profit. So smash the subscribe button if you haven't done so yet. And thanks for watching. Peace out. I'll see you in the next one.